Welcome, guys, back to Before the Millions Trading Academy. Today, I'm going to be breaking down how to get sniper entries on your trades. Now, I know drawdown is inevitable when it comes to trading. You're always going to go into drawdown, but I'm going to show you guys in this video how you guys can minimize with the same trades you're already taking. You can get precise entries so that you can minimize your stop loss, have way smaller stop loss, and now even double, potentially triple your risk to reward. I'm talking about on the same play, guys. The same play you were getting a 1-3, 1-4 risk to reward from. Today, doesn't matter what strategy you have, this is going to work for 95% of people. I promise you. 95% of people, this is going to go crazy for you. And you're going to be able to learn how to minimize your risk and be able to get to some 1-7s, 1-10s, 1-5 plus risk rewards on all of your trades, right? So let's go ahead and get into it. So first things first, this strategy and this method of getting sniper entries, this precision technique, works for those people that use engulfing or pin bars. Now, guys, if you're an institutional trader or you're a retail trader, believe it or not, if you're a profitable trader, 9 times out of 10, you're using engulfings or pin bars in some type of way. For those that believe in things, in balances and things of that nature, let me show you guys, something of what people would call, an imbalance. Real quick, right? And for my institutional traders, don't kill me on the verbiage, but you guys see how these last 3 candles right here, there was a candle here, and the top of this previous candle is right here, right? The highest point of this candle is right here, right? And then we had this big bullish candle, and then we had this candle here, and the lowest point of this candle is here, right? So this is called an imbalance. There's no filling of a candle from the left or from the right in any type of way. So essentially, institutional traders look at this area as a place that the market would have to pull back to, right? Because it needs to be filled so they can get a better entry and then pop up, which actually indeed happened, right? This is also what some people will call an engulfing candle. A lot of engulfing candles leave imbalances, guys. So if you're an institutional trader, trust me, I got you covered. If you're a retail trader like me and you don't like to overcomplicate things, right? This is going to also work for you too. Because if you understand the nature of pin bars and engulfings, you already know, you know what I'm saying? You're already 80% there. So for those that do not know what an engulfing is and what a pin bar is, let me go ahead and give you some sauce, right? So an engulfing candlestick is a candlestick like this. It's a candlestick pattern. There's a 2 candlestick pattern. And the first thing you're going to have is you're going to have one candle, right? So it's either going to be, depending on what color your candles are, green. And then after that, you would have a red candle like that, right? Let's go ahead and change the color of this candle real quick to red. Now, this is an engulfing a bearish. Oh, I'm sorry, guys. It wouldn't look like this. It would look like this. There we go. This is what we call a bearish engulfing candle. Why do we call it a bearish engulfing candle? Well, whatever time frame you're on, for whatever period of time, if this is a 2-hour time frame, for this 2 hours, the market went up here. Then for the next 2 hours, the market completely engulfed. So it filled, right, this entire candle space and more. It engulfed it, right? It's bigger than it. This is usually a sign that the market is going to head down. If you guys go ahead and back test, and of course, you don't look for engulfings and pin bars anywhere, right? This is not going to be an in-depth engulfing or pin bar training. I'll do that on another training. But if you guys learn the nature of pin bars and engulfings, you know that you do not take them anywhere. You want to look for them at key places, at points of interest. We're talking about our zones. We're talking about maybe Fibonacci levels. Whatever point of interest you're looking at for the market to make a rejection. Candlestick patterns are usually the final confirmation. So say the market gets to a zone that you're looking at, you're like, okay, the market should bounce from this zone. This is a very strong supply or demand zone, whatever the case may be. A final confirmation that a lot of traders look for is that engulfing or that pin bar to confirm that the market is indeed going into that direction. So in this case, you would have a zone right here. The market would have approached that zone, right? Approach that zone just like that. You got that bullish candle into it, bearish candle, sell, right? And then vice versa for a bullish engulfing, right? So you have a down candle, and then the next candle will be a much And it doesn't have to be much bigger. And the key thing, guys, you want to focus on the body of the candles. Of course, as you guys know, every candle has wicks, right? So the wicks may be like this, but this would still be an engulfing candle. And the reason why this would be, if this was green, would be an engulfing candle is because the body of this green one is bigger than the body of this, right? It doesn't have to be bigger than the wick. So that is a engulfing. So this, when you have a pattern like this, a two candle pattern, always has to be alternative candles, red and blue, blue and red, or however your colors are, down and up and down. This will be a sign that the market is going to go up. Now, a pin bar is very similar to a bearish and engulfing candlestick pattern. They form the same function. It is just a different color. It forms the same function. It's like, you can get a red car or you can get a blue car, but you still got a car, right? It's going to still do the same thing. And that is what a pin bar is. So a pin bar, bearish pin bar would look like this. You would have a box. It doesn't matter what color. And that's the beauty with a pin bar. You'll have a wick to both sides of most candles. But the key thing is that the wick to the upside is much larger, right, than this. And the body is in the bottom 1/3 of the candle, of the entire candle's range. So long wick to one side and small body towards one edge, the other edge of the candle. Now, what this means is that the market at some point, a wick shows you that at some point, even though the market closed here, right, at some point when the market opened here, it pushed all the way up and they got pressed back down. So just imagine, um, imagine you were running in one direction, right? You were running, and then somebody pushed you and you slid all the way back. Or let's say you're running, and the wind blows and it pushes you all the way back. Well, if the wind, or let's say you're swimming in the ocean, even better. You're swimming in the ocean and the waves push you all the way back. That would let you know that there's a lot of pressure coming this way. And that's what a pin bar means. The market pushed up and then all the pressure pushed it back down. So most likely the market should be heading down. A pin bar is a one candle pattern, right? This is the unique qualities, body in the bottom 1/3 with a long wick to one side. And then a bullish pin bar would be very, very similar, just the opposite. Body in the top 1/3, right? That's the key thing. Long wick. And that is what a bullish pin bar looks like, right? And of course, this is to indicate that the market will go up. Now, let's just go to the market real quick and point out some pin bars in the golfing so you guys can know a bit of what I'm talking about. This right here would be a pin bar. As you guys can see, we have a small body in the top 1/3, long wick to the bottom. And as you can see, after that, the market actually went ahead and shot up. And what's actually interesting is, as we got a pin bar here, what we also got is a bullish engulfing. As you guys can see, we had a black candle. Look at the body. There's the body. And then this candle's body is much bigger, right? And as you can see, the market began to head up. This is another engulfing candle right here. You see a small body, then a bigger bullish body, and then we went straight up. That is what a engulfing candle looks like. Let me show you guys another pin bar. Another pin bar is right here. Look at that, long tail, small body, and the market went ahead and pushed up. And you got a couple more pin bars right here, right? Small body, long wick, the market pushed up. And like I said, there's other confluences that will go with it. As you guys can see, this is a level, so this could be an easy, strategy. Actually, to be honest, I just gave you guys some super sauce, but an easy break and retest. You got your pin bar. The market went ahead and went up. So that is what pin bars and engulfings look like. So if you're a person that takes pin bars and engulfings, you already knew what they were. Finally, we are here. It's time for the sauce. If you never knew what they were, congratulations. I just put you on some life-changing sauce. Now I'm about to take it to the next level, and you just learned it. So congratulations, right? Let's go ahead and get right into it. So if you trade the pin bar or engulfing, 9 times out of 10, this is how you trade it. Let's say we got a bearish engulfing. So we got a bullish candle, and then the next candle was a bearish candle, right? Now, most people, what they do, which is actually, I'm going to be honest, not the best way to trade it. And, I didn't realize this till I learned it. You never know till you learn. What they would do is once they get that engulfing close, they enter immediately with a short position. Immediately. So they're just like this. Boom, right? Stop loss. If you're trading an engulfing or pin bar, all you have to do, put your stop loss behind the engulfing and a pin bar. right? Certain people like to put it behind the zone. You really don't need to. If you're engulfing a pin bar is right, trust me, you only need to put it behind the engulfing of the pin bar. So usually what people will do is they'll go ahead and do this. Let me get these out of the way 1 second, right? So they'll go ahead and do this, and then they'll go for whatever risk reward they want. So let's just say you want for a 1 to 3 risk reward on this play, right? And this is how most people would generally, use a bearish engulfing. And same thing with a pin bar. Let me just draw real quick so you guys can see. We'll have these examples side by side. Pin bar will look like that, long tail, and they'll just go ahead and immediately once the pin bar closes, they're entering right off the close, stop losses above the high, and going for a 1 to 3 risk reward. Now, guys, this is why you do not want to do that, right? The reason why you do not want to do that, and if you trade the engulfing of the pin bar, just let me know if this has happened to you. There's times where you would enter immediately off the close, and you guys have to realize pin bars and engulfings is on baby pips. Everybody and their grandmother knows about engulfing to pin bars. So a lot of times people just enter off of any engulfing a pin bar that they see. And even if you do got a right one, a lot of times right after you enter, what ends up happening is the market goes immediately around, straight to stop loss. You got that engulfing, straight to stop loss. No time wasted at all, right? And I noticed a lot of my trades were doing this to me. A lot of them were doing this to me. And I'm like, damn, how can I avoid this? Let me teach you guys one simple trick. And this is not, I didn't get to the, guys, listen, if you want to get to the sniper entries, it's going to be at the end. This is first an entry you could do to, first and foremost, eliminate half of your losses automatically. Use a buy stop, guys. Listen, if you put your entry a few pips, just a few pips, just like that, boom, few pips below the low, let momentum be in your favor. So now if the market was really to go down, hear me, risk to reward rise. Just think about it logically. Any trade that's a winner, by me putting my stop loss a few pips below, every trade that's a winner inevitably has to tag me in. If you got in right there, 3 pips above me, and I got in 3 pips below you, we both have to get in if the market goes our way. And I'm still going for a 1 to 3. I don't care. I'm not going to sacrifice I'm still going to go for, I'm going to just move my TP a little bit longer. Now, what happens is every single winner that you take, I take. But every loser that you take, I don't take. Right? Of course, granted, the market can come and then go turn around and stop you out. Of course, we all would have took that loss. But I promise you, even if you can scrape out 2 losses out of 10, you automatically just exponentially increased your profit. You guys have to understand, trading has a lot to do with probability, but accuracy is a big component. If out of 10 trades, let's say right now you're currently winning 5, losing 5, well, if you can eliminate 2 of those losses, now you're winning 7, losing 3. That changes the game for you totally, right? So using a buy stop or sell stop 2 to 3 pips outside and let the momentum go with you, that is the best way to trade engulfings or pin bars, right? And that's the way I've been trading it for years, and it has served me phenomenally. I can't tell you guys how many trades turn right around, and I'm able to avoid it by just putting my stop loss 2 or 3 pips. And these are the little tips that no one talks about and are game changers for traders. And a lot of times in trading, it's the little things that really change the game. So that's the first thing. That's just first and foremost, I just showed you guys how to eliminate at least 20 to 30% of your losses, right? Now, let me show you guys how to take this to the next level. Sniper entry time, right? So look, every time we're going to start with the engulfing first. Every time you get an engulfing, like I told you guys, the institutional traders, they call this space, when you get an engulfing, this space between the last previous candle and this one, right? That's usually, an imbalance. Well, I would say, just to be specific so they don't knock my head off, with the next candle, usually there's a third candle, and in this space right here where no candle filled is what they usually call an imbalance. We're not worried about all that. I'm gonna keep it real simple for y'all. The previous candle before this engulfing candle, right? So this candle right here is what we're looking at. This candle is gonna have a wick 10 times out of 10, right? It's gonna look like that. and then this candle is gonna have some type of wick or something like that, right? So, like I said, this would generally be my entry, right? So, what I'm gonna do in this situation is this space right here, where the camera got engulfed, that wick, that area of the wick is what's important to you. That's the sniper entry, y'all. That's the sniper. That's the area. Listen, I'm gonna say it again. It's so simple. It probably went over your heads. You probably picked your phone up to look on Instagram real quick for a second. Come back. Watch this. Pay attention. When you get an engulfing candle, you have, if it's a bearish engulfing, you have a green candle, and then you have a up candle, then you have a down candle. And the down candle is bigger than the up candle. Now the up candle prior to the down candle, the one that got engulfed, this one has a wick. Now the bottom wick, this area, grab the wick. Just grab the wick. That's all you need is the wick. Just grab the wick. That area, that's the sniper. Now look, remember I told y'all, I'm gonna show you how to minimize your stop losses and maximize your risk to rewards. Now look, remember this was a 1 to 3 risk to reward. If I move this to this entry, I now have a 1 to 7. See, I just turned a 1 to 3 to a 1 to between a 1 to 6 and a 1 to 7 risk to reward. Right? And same thing with the pin bar. I'm gonna show you the pin bar real quick, and then we're gonna go into the charts. So the pin bar, we're again looking at the previous candle. The previous candle prior to the pin bar, let's just say it was a bullish candle that looked like that. Boom. Now this candle also has a top wick. It has a top wick. That top wick, boom, it would just look just like that. This top wick is your sniper entry. Grab this area, and this is where you want to sell from. So look, this same 1 to 3, if I push this up, just turned to a 1 to 5 risk reward, same play. I now just increased my risk to reward on the same play. Let's go to the charts. Remember, guys, if it's a pin bar, we're looking at the previous candle. We're always looking at the previous candle. Look at the previous candle if it's a pin bar. Let me get that wick of the previous candle, and I'm entering off the wick of the previous candle. Same thing with engulfing. If I get a bearish engulfing, I'm looking at that bottom wick. If I get a bullish engulfing, I'm looking at the top wick of the previous candle, and I'm entering there. So let's go ahead and go into the charts and find some examples of what I'm talking about. So boom, first things first, let's go ahead and start off here, right? So as you guys can see, we got this engulfing. And like I said, pin bars and engulfings, we're not just going to use them by themselves, right? First things first, you can see the market structure here was clearly bullish. So you already seeing bullish market structure will give you a heads up that we're going up. Now, as you guys can see here, we got a beautiful bullish engulfing candle box to the top 1/3 of the candle, right? Now, look, let's go ahead and zoom in. What did I tell y'all? We're looking at the candle prior. So if we zoom into this candle, right? This is our pin bar that I'm hovering over. If we look to the candle before that, this black one, what you want to do is grab the wick, box the wick up, drag it across, right? And this is your entry area. And I want y'all to see how initially this engulfing, I would have entered it just like that. Bing, right? Boom. Stop loss here. Let's say I went for a 1 to 3 risk reward. Feeling big and bad. 1 to 3 risk reward. Let's get this money, right? Cool. 1 to 3 risk reward. Now, what happened? With my alternative entry, that 1 to 3 turned to a... Oh, let's go ahead and let's do that the right way. Mistakenly moved the whole thing. By 1 to 3 turned to a 1 to 4.6. Same play turned to a 1 to 4.6. And guys, look exactly what the market did. The market literally, after we had this candle, the next candle wicked into our box. Right? Wicked right into our box. Just came a little bit out. You probably went into 2. Let's see how many pip points this is. You went into 5-point drawdown, and then the market completely turned around in your favor. Completely. Oh my God. Beautiful. Let's look at another one. This is another pin bar that we have. Like I said, guys, We have that bullish market structure. So you already have a heads up that the market is headed up. And we have a beautiful pin bar right here, bullish pin bar, body in the top 1/3, long tail, going to the bottom. So that's giving us a bullish sign. So like I said, initially, buy would have been buy stop just like that. Stop loss right below. Like I said, we feeling big and bad, bro. We going for that 1-3. Let's get this money. Now, again, same situation. What's the candle before this? What's the candle before that? Before this candle was this candle. Now this candle has a bottom wick. That bottom wick, because I'm looking for a buy, is my entry. So my entry would have been literally somewhere in this box, in this region. Get it right in the middle, right? And in this case, you would have got wicked in. And of course, the market did pull back on you, and then it went in your favor. But look at this. This same 1-3 trade would have turned into a 1-4.5. Now, this is a long wick trade. That's why it's happening like that. But look how you just turn 1-3s into automatic 1-4.5s. Same plays. You're not changing your play. Just notice how you're making more money without changing a simple thing, right? Let's look at some more examples. Here, we have a bearish engulfing, right? We have a bearish engulfing candle. So like I said, entry will be a few pips below the low. Stop loss will be at the high. Now, in this case, let's just say you went for a 1-3. Now, obviously, we didn't get our 1-3, right? And generally, the way I trade is when I go to a 1-to-1 risk to reward, I go break even. So in this case, you would have went to a 1-to-1.3. So you would have I personally would have went break even on this trade. But let me show you guys what we would have done for the alternative entry here. So notice how before this engulfing, and let me go ahead and hit my replay tool. So I'm gonna show you guys prior what was going on. So your candle looked like this, right? So remember the previous candle, I'm looking at the wick of the previous candle, the bottom wick. This is the bottom wick. What I'm gonna go ahead and do is box that up. And what I'm trying to do is my entry is going to be right in the area. So I need the market to pull back, tap me in, and then we gone, right? So instead of a 1-3, I'm now looking for a 1-8. Oh my God. And you're really feeling bad. You want to get it at the edge. That's a 1-9 risk to reward if you was really feeling bad. Now let's go ahead and hit the next candle. Look how the next candle went right to the middle. Look how it came right to the spot. Tagged us right in, right? Bang. Money. Bang. Money. So remember, the last person only was able to get a 1-to-1 risk reward. Look at you feeling big and bad. You're already at a 1-to-2.6, right? I'm telling you, this is money all day. Let's look at this one right here. Same thing. We had an engulfing pattern. I'm telling you, this is some sauce, bro. You have an engulfing, right? Now, remember, the top wick, because we're looking for a buy this time, the top wick. And look, this is actually a pin bar / engulfing. I'm going to show you how to pin bar next. I'm going to show you how to engulfing first. Matter of fact, I'm going to show you how to engulfing first. Let's take it back. The engulfing happened first. Let's show the engulfing first. You got an engulfing candle looking just like this. What do? You see the previous candle before this. You're looking at the bottom wick of that. This is the bottom wick, right? This is the pin bar, previous candle, bottom wick. Super simple, right? Don't sit here and overthink it. Box that up. Boom. This is my entry now. This is my entry now. So literally, off rip, I'm entering. Off rip. Off rip. I'm going for a 1-3. Sorry. Wait, actually, my initial entry would have been there. So my 1-3 would have looked like this. That would have been my 1-3, but because I'm entering here, right? Let's go ahead and fix that. I'm able to get a 1-2-5 risk reward, actually, right? Beautiful, right? So boom, you can see sniper entry. Give me the money. Give me the money. We right in profit. Now you got it engulfing. So what are we gonna do with this? What's the previous candle, family? What's the previous candle? Then the pin bar we were just talking about. Where's the top wick of the pin bar? Oh, that's easy. That's right there. That's the top wick. All right, so where am I enter at? Right there, of course, dummy. All right, cool. Well, my first, if I was going for a 1-3 off the engulfing, let's say the pin bar wasn't there or you didn't see it or you were too late, whatever, and you entered off the engulfing. So your 1-3 would have looked like this. Well, me personally, because I know the alternative entry, I'm going to wait because I don't want that. big stop loss. I don't want to have to do all that. So you know what? I'm gonna drag it down and be able to get a 1 to 6.5 risk to reward off this trade. Let's look for the next candle. Let's zoom in. See what the next candle do. Okay, it didn't touch me. It didn't touch me. Don't force it. Stay patient. It didn't tag us in yet. It didn't tag us in yet. There we go. Now we in there. Now we in there. And let's see the market go ahead and bow. You see how the market came right to you? The market came right to our entry and flew. Right to our entry and absolutely went bonkers, right? So guys, this is what you can now add to your arsenal, add to your bag. Back test this, family. Add it to your bag and see if it's worth it, see if it works for your strategy and for your skill set. And I promise you, the same place you've been getting 1 to 3s on, 1 to 4s, you're now getting 1 to 5s, 1 to 7s, 1 to 8s, 1 to 9s, right? It gets pretty scary out here, family. But now, I showed you guys the pro. The pro of this strategy is, and this method, this tactic, I should say, is you get more favorable risk to rewards. Here is the con of this strategy. I'm real. Y'all know I keep it a buck all the time. You will get left out of some trades. So let's just say we were looking at this, right? Now, your entry would have been, the previous candle was here, so your entry would have been that box right there. You've been waiting for the market to come get you, and look, bang, it never came and got you. You have to be able to live with this. You have to be able to live with that. Because if you enter the normal way, you would have been able to catch that play. Like I said, you don't have the same risk rewards, but same thing. Same thing with this play, right? And this one would have really broke somebody's heart. So your entry, you would have been looking like this, and this has a long wick. So of course, there's the wick behind the candle. So you probably would have been like this. All right, cool. You went for a very slight pullback. And look how slight the pullback you need for the next candle to be. And let's just see if the next candle, nope. The next candle didn't even pull up. Look at this. It didn't even pull up a little bit. You just wanted a slight pullback to go, and you didn't even get that. And it just flew. This would have made me cry. So you have to be able to live with this, right? And what you can do, if you want your cake and you want to be able to eat it too, split entries. Split up your entries. If you get it engulfing, so if it was this situation, what you would do is, let's say you wanted to risk $100, right? You got $100, that's your risk, 100, cool, right? You will break it up into $50 plays, two $50 plays. The first one, right, and if this was, let's just replay. The first entry would be, of course, the sell stop. Like I told you, because that is the safest way. Entering immediately is not the safest option. The safest option is a sell stop. Because if the market is right, you will always be there. And if it's wrong, sometimes you'll be able to wiggle your way out of a couple of losses. Right. Now, first entry is the sell stop. Now, the second entry would be your alternative entry. What I generally do is go for the same TP. So let's say it will look like this, right? And this would be my second entry. And usually I just like to layer them. I know some people put them side by side, but for aesthetics or whatever. But this one would have gave me a 1 to 5 risk to reward, right? And this one would have gave me a 1 to 3. Going for the same TP, same play. In this situation, at least I'll be risking $50 on this play to make 150, and I'm risking $50 on this play to make about $250, right? So in total, you'll be taking home about $400. Instead, if you were just risking a straight 100 to make 300, now you risk 100 to make 400. If both plays, well, over 400 actually, but if both plays were to go your way. In this situation, like I said, you only risk half, right? And in that situation, of course, like I told you, the point of the sell stop is to avoid when the market gives you an engulfing and turn right around, right? So we want to avoid some of those minor losses. 20% of those are losses, 20-30%. So it's like, all right, cool. Well, granted, every single time you use an alternative entry, you will always be caught in that, because if the market does pull back and you're wrong, obviously you're always going to, because the entry is behind here, you're always going to be caught in those losses. So in that case, you'll only lose 0.5%. Now, if you're a person that enters immediately after the close of the candle, you might as well do that anyway, because you would have lost anyway. So remember, guys, the key is to back test this for yourself. I hope you guys enjoyed this video. Hope you guys enjoyed this sauce. Like I said, if you already are taking these entries the regular way, look at the alternative entries. Look at the self stop, the safe, and the alternative entries. And by twin trading them, you just are able to put yourself in the best possible situation to increase your possible risk to reward and your output on the same plays that you're taking, so you don't have to increase risk and you can increase profits. All right, y'all. This is Before the Meal. This is your boy Mike. Keep getting that money. Keep being great. Keep passing challenges. Keep getting them withdrawals, man. We out of here. I love every single one of y'all.